Hi, I'm Lance Roberts with 3 minutes on markets and money. Let's talk a little bit about the markets because we continue as we enter a new week here and as we get ready to wrap up the month of August, already moving the last half of the month, heading into September. The markets have really been treading sideways here for quite some time. In fact, on an inflation-adjusted basis, the market today is trading at the same level as it was in January of 2018. So 18 months, really, the market's not gone anywhere, but we've certainly had a big pickup in volatility here, and that's one of the big issues that continues to really kind of work on investors is that has been this back and forth action in the markets. We have these rallies to highs, the markets then fail off, find support, we rally back to new highs, and of course the question becomes is how long can this market continue to digest this previous run we've had in the market over the last decade? Is this just a digestion ready to work its way higher into another major market advance from here, or is this more of a major kind of market topping process that we've seen in the past? The difference is, in particular, is that we have a lot of things going on economically that are certainly concerning here. First of all, from a fundamental basis, valuations are elevated. We've got valuations basically at the second highest level in history, really kind of pushing up there on a valuation basis. Interest rates are falling, which are really more of an indication of weaker economic growth and deflationary pressures in the economy. That really doesn't play well or bode well with a kind of a raging bull market here that would suggest support for higher asset prices. We're also seeing a deterioration in corporate profits. Corporate profits now at the same levels they were, even on an after-tax basis, as they were back in 2011, 2012. So here we've had a market that's up substantially over the course of the last decade, but yet corporate profitability really hasn't risen to the same degree. Support for the markets is really beginning to deteriorate on a variety of levels because of trade wars, because of tariffs, those type of issues. But the one area that's really kind of been a focus of the markets as of late has been the 10-year Treasury yield. Bond prices have gone virtually parabolic here over the course of just the last few weeks as concerns about a recessionary risk continue to rise. There's a lot of focus on recession currently, which makes us a little bit concerned here because generally too many people focusing on an issue, it tends not to happen when people think it will. It's when people aren't paying attention to something that something happens. This is the most anticipated recession probably ever in history, which suggests that the outcome of this may be vastly different than what many people expect. Yes, we could still have a recession, but the results and consequences of that could be vastly different than what's currently expected by the markets, because despite the rising recessionary risk, markets are still very close to all-time highs. You wouldn't suspect that to be the case if the concerns about the economy were really being focused on in particular. So there's a lot of talk about recession, but yet stock investors really aren't paying much attention to that. That's where potentially the risk lies. It's when those two views come to meet. That's 3 minutes on markets and money. I'm your host, Lance Roberts. Keep a watch on this. This is big, important stuff that's coming up, particularly as we enter the last phase of the year. Keep a watch on your money here at realinvestmentadvice.com. We'll see you next time.